nightly business report.
Good evening. Tonight, trade tariffs set by US President Donald Trump's government may pose difficulties for Sri Lanka's textile and clothing industries, according to Deputy Minister for Economic Development Dr. Anil Jayantha Fernando. Sri Lanka's economy grew faster than expected last quarter with a 5.4% rise in GDP for the December quarter, supported by strong domestic activity and aid from the International Monetary Fund. On the third trading day of the week, the Colombo Stock Exchange saw an upward momentum, reversing the downward trend from previous days. And Wall Street ended lower as investors awaited a monetary policy decision from the Federal Reserve, which is widely expected to keep interest rates unchanged.
From Studio 24, here's Anuradhi Vikramasinghe.
Good evening and thank you for joining us. Sri Lanka's apparel and textile sectors face potential challenges from US President Donald Trump's trade tariffs, although the expected impact is currently minimal, according to the Economic Development Deputy Minister, Professor Anil Jayantha Fernando.
Sri Lanka's apparel and textile sectors are at risk from US President Donald Trump's trade tariffs, although the anticipated impact is currently minimal, according to the Economic Development Deputy Minister Professor Anil Jayantha Fernando. Speaking in Parliament, Fernando noted that Sri Lanka is in an advantageous position as the US faces a trade deficit with the country. However, he acknowledged that the impact might be limited due to Sri Lanka's weaker currency compared to the US dollar. The sectors most vulnerable to these tariffs based on 2024 trade data include apparel, textiles, rubber products, coconut products and plastics, which together account for 86% of Sri Lanka's export revenue. In 2024, total US goods trade with Sri Lanka amounted to $3.4 billion, with US exports rising 4.9%, while imports from Sri Lanka grew by 6.1%. Despite the potential risk, Fernando emphasized that Sri Lanka's strong diplomatic ties with the US should mitigate the negative impact of the tariffs. The Finance Ministry, Trade Ministry and Export Development Board are closely analyzing the situation, with discussions already underway between Sri Lanka's ambassador to the US and the US Trade Representative's office.
Minister Vijitha Herath has appointed some of the best minds in the industry to the new Tourism Advisory Committee. Established under Section 32 of the Tourism Act No. 38 of 2005, the committee's role is to advise the government on strategic and sustainable tourism development. The committee aims to align the growth of the tourism industry with the national tourism policy, bringing together leaders and professionals from various sectors. Dilipa Mudandeniya, Senior Vice President at John Keells Holdings PLC, has been appointed as the chairman of the committee. Sri Lanka Tourism has set an ambitious target of attracting 3 million visitors and generating $5 billion in income by 2025. In 2024, the industry showed resilience with 2 million tourists and over $3.2 billion in revenue, marking a 52.38% year-on-year growth. Sri Lanka's economy grew faster than expected last quarter, with a 5.4% rise in GDP for the December quarter, supported by strong domestic activity and aid from the International Monetary Fund.
Sri Lanka's economy grew 5.4% in December quarter, surpassing economics expectations thanks to a strong domestic activity and support from the IMF. For the full year, the economy expanded 5%, recovering from a 2.3% contraction in 2023. Sri Lanka's economic recovery is gaining momentum following its unprecedented default in 2022, with growth forecasted to continue around 5% this year. The country secured $334 million in IMF loans this month, providing a boost to its recovery efforts. Industrial production saw a 13.1% increase, while the service sector grew by 2.5%. However, agriculture faced a contraction of 2.2% during the period. The central bank has kept its benchmark interest rate at 8% to control the inflation and support economic revival, with the next policy meeting scheduled for the 26th of March.
Sri Lanka's digital services sector is adapting to new tax measures introduced in the latest national budget, signaling a shift in the industry's financial landscape. While these changes present challenges, the sector remains resilient, committed to growth and actively collaborating with the government to maintain competitiveness. A significant policy change is that non-domiciled digital service providers must now contribute to the economy through taxation, ensuring fairness for local businesses. Industry leaders are concerned about about potential negative impacts, particularly on digital exports and freelancers who may consider relocating to tax-friendly jurisdictions. The Digital Economy Ministry is exploring various strategies, including concessionary loans, skill development and enhanced digital infrastructure to support long-term growth. The government is also focused on building a cashless society and increasing digital payments with a target of growing the digital economy to $15 billion by 2030. The government is actively working towards building a cashless society and boosting digital payments with a focus on enhancing financial inclusion and convenience. This was stated by Deputy Minister of Digital Economy Eranga Veeraratne on Get Real with Mahesh Johnny earlier today.
So we launched GovPay recently, relaunched GovPay recently actually. So that is to pay for government services through digital mode. So currently we have about 24 government institutions connected to GovPay for payments for various services, and we are going to expand that by another close to 50 services within like next 3 months time frame. So that's the first step that in the digital payments that we are taking, because digital payments will change drastically the way the society is transacting in terms of money. Because what we see is there are about 1.5 trillion rupees in circulation as cash, as notes. So having that much of money as in the cash mode or the notes as notes doesn't add any value to the economy, because
that's costly too.
It's costly too. If you have 5,000 rupee note in your pocket, it is only a number. It doesn't add any value to the economy. When you are transacting with that money that you have, only it will add certain value to the economy. So, however, like if you have that 5,000 note in your bank account, it will give you interest. It will allow the bank to invest that money. It will ultimately help for the economy to grow. So, we want to bring as much as possible those money that is circulating in cash mode back to the financial institutions, the financial system. Then only that money, if we even bring like let's say 1/3 out of 1.5 trillion, that's about 500 billion rupees. So that money will be available for both government and the private sector to invest on their business activities and grow the economy. So that's one of the ultimate objective that we have.
The European Union delegation in Sri Lanka, in collaboration with the Export Development Board, has launched the Creative Sri Lanka 2030 Matchmaking Pilot Program 2025. This groundbreaking initiative seeks to promote Sri Lankan craft products in the global market, creating new opportunities for local brands and designers.
The European Union delegation to the Sri Lanka, in collaboration with the Export Development Board, launched the Creative Sri Lanka 2030 Matchmaking Pilot Program 2025, aimed to promote Sri Lankan crafts products globally. The event held at the Sri Lankan Export Development Board brought together leading European and UK brands with local counterparts and international experts to discuss ethical trade and design collaboration. Mr. Mangal Vijayasinghe, who is the chairman and CEO of the EDB, highlighted the opportunity to scale Sri Lanka's crafts sector on the international stage. The initiative is built on 3 years of research focusing on integrating micro and SME craft enterprises into global supply chains. The program also emphasizes sustainability, inclusion, and the potential for Sri Lanka's crafts to thrive in the modern economy. Stakeholders explored how to redefine Sri Lanka's global craft and design position through ethical partnerships. Creative Sri Lanka 2030 seeks to empower the country's creative industries and ensure long-term growth and international recognition.
Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. On the third trading day of the week, the Colombo Stock Exchange saw an upward momentum, reversing the downward trend from previous days. Both the All-Share Price Index and S&P SL20 indices experienced an increase compared to the previous day. For further insights, we speak with Akna Tennakon from First Capital Holdings.
Thank you, Anuradhi.
Today the market saw some visible volatility following yesterday's downturn. The SPI picked up and gained momentum during the early hours of today's session, propelled by bargain buying. However, as the day progressed, the index dwindled as investors changed gear and shifted towards profit taking. All in all, the SPI concluded the day in the green at 15,406, having registered a subtle uptick of about 12 points. The banking sector made a significant positive contribution towards the SPI, with Commercial Bank, HNB, NDB and Sapat Bank emerging among the top contributors alongside Melsa Corp. On the flip side, LOLC Holdings, Brown Investments and Hemas Holdings were amongst the top negative contributors to the index. Turnover remained stagnant, ending the day at 1.3 billion rupees, registering a slight downtick from yesterday. This is also significantly lower than the monthly average of about 2.5 billion rupees. In terms of sector-wise contribution to turnover, the capital goods sector ascended to dominance with a contribution of about 35%. This was followed by the banking sector and food, beverage and tobacco sector, which produced a joint contribution of about 36%. Thank you.
The latest government securities auction saw strong demand with competitive yields and closely aligned accepted amounts across all maturities. For further insights on this, we speak with Manusha Kandanarachi from First Capital Holdings.
Thank you, Anuradhi. In today's Treasury bill auction, weighted average yields recorded declines across the board. CBSL fully accepted the total offered amount of 143 billion rupees and all the 3 months, 6 months and 12-month bills were oversubscribed. The weighted average yield for 3-month bill stood at 7.5%, recording a drop of 2 basis points compared to the previous auction. The 3-month bill yielded partially acceptance of 25 billion rupees compared to the offered amount of 15.5 billion rupees. The yield for 6 months bill stood at 7.84%, recording a decline of 4 basis points and yielding an acceptance of 49.3 billion rupees compared to the offered amount of 50 billion rupees. On the other hand, the weighted average yield rate for 12-month bill stood at 8.25%, recording only a 9 basis points decline from the previous auction, yielding an acceptance of 78.3 billion rupees compared to offered amount of 68 billion rupees. Additionally, during previous trading session, ahead of the today's bill auction, the secondary market yield curve saw high buying interest and high volumes across the board. Thank you.
Gold prices edged higher to a record high in Asian trading today, driven by strong safe haven demand amid ongoing geopolitical tensions in the Middle East and concerns over trade tariffs. Spot gold rose 0.1%, reaching $3,039 per ounce, while gold futures for May delivery also gained 0.1%, hitting a peak of $3,046.12 per ounce. Investors remain cautious ahead of the Federal Reserve's meeting, which is expected to provide more clarity on the U.S. economy. Over the past week, gold saw a sharp increase as U.S. President Donald Trump's ongoing trade tariff threats and fears of a U.S. recession dampened investor risk appetite, further weakening the dollar. The precious metal surged to a new high on Tuesday after the Israel-Hamas ceasefire collapsed, escalating Middle East tensions. Additionally, slow progress in Russia-Ukraine ceasefire talks contributed to the rising demand for safe haven assets. Oil prices dipped in Asian trading today, continuing a nearly 1% drop from the previous session. The decline was driven by concerns over oversupply following a US-Russia agreement on a 30-day ceasefire in Ukraine's energy sector and rising crude inventories. Brent oil futures for May delivery fell 0.4% to $70.25 per barrel, while West Texas Intermediate crude futures dropped 0.4% to $66.48 per barrel. Both contracts had surged earlier in the day due to escalating Middle East tensions, but ended nearly 1% lower after the announcement of temporary peace measures in Ukraine. Investors were also cautious ahead of the Federal Reserve meeting, where the central bank is expected to keep interest rates unchanged. The market remains uncertain about future price movements as geopolitical and economic factors continue to weigh on investor sentiment. The Sri Lankan rupee has shown notable appreciation against the US dollar at commercial banks today compared to yesterday. According to the commercial bank, both the buying and selling rates of the US dollar have decreased. Let's now take a closer look at how the Sri Lankan rupee is performing against other major global currencies. A short break now. This is the Nightly Business Report. Welcome back. TV Derana was awarded Youth Choice Television Channel of the Year at the 2025 Slim Kanta People's Awards, which took place last night at the Monarch Imperial in Sri Jayawardhanapura Kotte. TV Derana has once again been awarded the 2025 Slim Kanta People's Award for Youth Choice Television Channel of the Year. The prestigious award ceremony took place last night at the Monarch Imperial in Sri Jayawardhanapura Kotte. This recognition highlights the channel's continued popularity and appeal among the youth audience. The event celebrated excellence in the media industry with various awards presented to outstanding individuals. Chathura Alvis won the Slim Kanta People's Award for News Presenter of the Year for the 8th time, cementing his reputation as a leading news personality. The ceremony was attended by industry professionals showcasing the best in broadcasting. TV Derana's achievement underscores its commitment to delivering quality content to its viewers. The event also marked another milestone in the channel's remarkable success in the television industry. John Keel's CG Auto, the authorized distributor of BYD in Sri Lanka, has launched the country's first dedicated NEV service center aimed at training technicians in EV maintenance. This initiative addresses the growing demand for skilled workers in the electric vehicle and new energy vehicle sectors. As the global NEV revolution accelerates, Sri Lanka has the opportunity to become a leader in sustainable mobility by building a future-ready workforce. The service center will offer specialized training in areas such as battery management, powertrain systems and software diagnostics, ensuring technicians are equipped to maintain the emerging NEV fleet. According to Chaturanga Kahavatta, the head of after-sales services at John Keel CG Auto, the shift from conventional vehicles to EVs requires new skills focused on high-voltage batteries and electronic systems. This move by John Keel CG Auto supports the long-term development of a skilled workforce and positions Sri Lanka to thrive in the evolving global automotive industry. UTE has delivered Sri Lanka's largest CAT D8 track-type tractor to NEM Construction Private Limited, marking a significant milestone for the country's construction industry and reinforcing UTE's leadership in heavy machinery. In a milestone for Sri Lanka's construction industry, UTE has delivered the country's largest CAT D8 track-type tractor to NEM Construction Private Limited. This marks the continuation of a 45-year partnership between UTE and NEM Construction, with the new equipment set to enhance operational efficiency. UTE, as the sole authorized dealer for Caterpillar in Sri Lanka, has long been recognized for its expertise and top-tier machinery. The CAT D8 delivery emphasizes the strong and value-adding relationship between UTE and NEM Construction. The event also coincides with Caterpillar's 100th anniversary, further highlighting the trust placed in both the brand and UTE. Mr. Raja Nanayakara, the chairman and MD of NEM Construction, expressed his satisfaction with the CAT product and UTE's exceptional service. The purchase of the CAT D8 underscores NEM's continued confidence in UTE's professionalism and unmatched after-sales support. David Tyler, the director of the World LPG Association, visited Sri Lanka and met with Laughs Gas to discuss the global LPG industry's trends and opportunities for local growth. He highlighted that North America and the Middle East are the largest producers of LPG, with the Asia-Pacific region consuming over half of global production. Tyler emphasized the importance of transitioning nearly 2 billion people from traditional fuels to LPG, particularly in Sri Lanka. He also advocated for the creation of a unified LPG industry association in Sri Lanka to foster collaboration and policy development. Tyler provided insights into global LPG pricing, which remains stable at around $650 to $700 per metric ton, noting that LPG is cost-effective and environmentally friendly. The Laughs Holdings Group chairman reaffirmed their commitment to Sri Lanka's LPG industry by optimizing their assets, including the strategic LPG terminal in Hambantota. Now, Local Hospitals PLC has achieved a significant milestone by introducing South Asia's first AI-driven Canon Vantage Orion MRI scanner, revolutionizing healthcare with advanced technology.
Navalok Hospitals PLC has officially commissioned South Asia's first AI-powered Canon Vantage Orion MRI scanning, marking a major milestone in medical innovation. This cutting-edge technology, which is a part of a $4.5 million investment in upgrading the hospital's radiology system, enhances diagnostic precision and improves patient care. The AI-powered MRI integrates deep learning algorithms to provide faster, clearer imaging for early disease detection and diagnosis. It is designed to diagnose a wide range of complex conditions including neurological, musculoskeletal, cardiovascular, and abdominal issues, as well as early cancer detection. The MRI features a spacious open bore design, reducing claustrophobia, and advanced noise reduction technology for quieter, more comfortable experience. Its precise imaging quality engine eliminates external noise, ensuring pristine images without the need for retakes. With these advancements, Navalok's radiology services are now aligned with the international standards, offering world-class care to patients.
Kanthimani Sivanesan has been appointed as an independent director at the board of LOLC Holdings PLC, filling the vacancy left by MD Piris, who retired after more than 9 years of service. Sivanesan is a well-known professional serving as the partner and head of tax at Amrasekara & Co. Chartered Accountants. With over 20 years of experience in taxation, he is a specialist in research and technical studies in the field. He is a fellow member of both the Institute of Chartered Accountants of Sri Lanka and the Institute of Certified Management Accountants of Sri Lanka. Sivanesan holds a bachelor's degree in commerce from the University of Sri Jayawardhanapura. Additionally, he has over 20 years of experience as a lecturer in taxation for final level students of CA Sri Lanka. Let's take a short break now. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Asian stocks traded in a narrow range today, with Chinese markets pulling back from a rally driven by stimulus measures and technology optimism. Japan's Nikkei 225 and Topix indexes continued their upward trend, rising 0.7% and 1% respectively, fueled by gains in the country's top trading houses. This positive momentum followed Berkshire Hathaway's increased investments in Japanese firms. Chinese stocks, including the Shanghai Shenzhen CSI 300 and the Shanghai Composite, were flat, while Hong Kong's Hang Seng Index saw slight gains due to strength in local tech stocks. In recent weeks, Chinese stocks surged amid government plans to boost private spending and support economic growth. Xiaomi Corp led the tech sector with a nearly 2% rise, reaching a record high after reporting strong fourth quarter earnings and raising its electric vehicle sales target. Wall Street ended lower as investors awaited a monetary policy decision from the Federal Reserve, which is widely expected to keep interest rates unchanged when it releases its statement later today.
U.S. stocks snapped a two-session streak of gains, with the Dow dropping 0.6%, the S&P 500 shedding over 1%, and the Nasdaq plunging 1.7%. Investors exercised caution ahead of a monetary policy decision from the Federal Reserve on Wednesday, while continuing to gauge the potential impact of President Donald Trump's tariff policies. Stocks had shown some signs of stabilizing after weeks of declines that sent the S&P 500 and NASDAQ into correction territory. The blue-chip Dow is now just over 2% away from also entering a correction. Mega-cap tech stocks were among the hardest hit on Tuesday, with NVIDIA sliding almost 3.5%. Speaking at the company's annual software developer conference, CEO Jensen Huang defended the company's lead in selling AI chips. Tesla tumbled more than 5% after brokerage RBC slashed its price target on the EV maker stock, citing reduced expectations for its full self-driving pricing and robotaxi market share. Its shares are now down nearly 45% on the year. And shares of Alphabet fell more than 2% after the company said it would buy Wiz for about $32 billion in its biggest deal ever as the Google parent doubles down on cybersecurity.
Xiaomi reported a near 50% increase in Q4 revenue to $15 billion, beating analyst estimates. The Chinese tech giant also raised its 2025 electric vehicle delivery target to 35,000, following the launch of its SU sedan last year.
Xiaomi is filling the gap left by Huawei. Revenues at the Chinese phone maker leapt 55% to $12 billion in the first quarter. That was better than already robust analyst forecasts. Xiaomi's share of the smartphone market in China surged by 75% on the year. That comes as Huawei retreated from the market under pressure from US sanctions. It's barred from accessing key technologies of US origin, hampering its new product development. Xiaomi, by contrast, has been removed from a US blacklist. But one cloud still hangs over the firm. Like many manufacturers of all kinds, it's battling the global shortage of chips. Semiconductor supplies have been hit by surge in demand, factory problems and other factors. For now, Xiaomi says its chip stocks remain at healthy levels, but it warned that the global shortage could persist into mid-2022.
But that's all from us here on the Nightly Business Report for today. We'll see you again tomorrow with the latest updates across the business globe. Till then, I'm Anuradhi Vikramasinghe. Thank you very much for watching. Have a good night.